Welcome to TRN, episode 128. Today, we're taking a closer look at the recent performance of the IT services company Atos. We're drawing on their latest reports, which you shared with us, and we're going to unpack what they tell us about the company's current situation and, well, where it might be heading. Our aim today is really to give you a clear grasp of the key takeaways without getting bogged down in, excessive technical jargon. Okay, so let's kick things off with the headline numbers. Revenue for the first quarter of 2025, it's down significantly, organically, by 15.9% compared to Q1 2024. That comes out at 2.07 billion euros, or actually, one report says 2.068 billion to be precise. And this drop is put down to a few things. Low order entry back in 2024 before their financial restructuring, the deliberate shrinking of their business process, outsourcing BPO in the UK, some contracts ending, and maybe just some general market softness.
Yeah, and what's really interesting here, I think, is to see this drop in the context of that financial restructuring they just finished,
Yeah.
right? End of 2024. The company itself is framing this performance as confirming an inflection, a turning point, maybe in their business path after the restructuring. So, yeah, the top line revenue is down, but there's a strong suggestion this was, well, somewhat expected, part of the plan, linked to those strategic shifts.
Right. But despite that revenue dip, there is a positive sign, isn't there, in their commercial activity? Order entry actually went up to 1.7 billion euros in Q1 2025. That's compared to 1.6 billion a year ago. And notably, 1.1 billion of that is for new services sold, either to new clients or, new work for existing ones.
Absolutely. And that rise in order entry, particularly the new service contracts, it really suggests clients are regaining confidence after the restructuring dust settles. The CEO, Philippe Sal, he specifically mentions this confidence and engagement of our clients. And that's, well, it's a crucial leading indicator for future revenue, isn't it?
Another key metric showing improvement, the book-to-bill ratio. That climbed to 81% in Q1 2025, which is a pretty significant jump from 64% in Q1 2024. So essentially, they're booking more new business relative to the revenue they're currently recognizing.
Exactly. And a higher book-to-bill generally points towards a healthier business, a stronger pipeline. In Atos' case, they highlight that this improvement is getting a boost from multi-year contract renewals and, like you said, those new business wins that have substantial revenue potential down the line. It really could be a turning point. Think about it. For every euro of revenue they build, they secured 81 cents worth of future work. Looks better going forward.
Okay, let's look at the two main divisions then. Eviden and Tech Foundations. Both saw organic revenue declines. Eviden was down by 14.0%. They say that's impacted by contracts ending, some scope reductions in their digital activities, and that market softness again, particularly hitting them in North America and the UK and Ireland. Their Big Data and Security Unit, BDS, saw lower activity in cybersecurity services, although that was offset somewhat by growth in advanced computing projects, specifically in India and Germany.
That varied performance within Eviden is quite interesting. So cybersecurity faced some headwinds, clearly, but the growth in advanced computing, well, that suggests they might still have real strength in certain high-tech areas. And the regional differences are worth noting, too. North America seems like a particularly tough market for them right now. You have to wonder if maybe they're shifting focus a bit strategically towards areas like advanced computing where things seem to be going better.
And Tech Foundations, that saw an even steeper decline, didn't it? 17.5%. Apparently, that was driven by previously agreed contract terminations and completions, again in North America. Also, lower revenue from major events now that the Paris Olympic cycle is over, plus contract reductions in the UK. And their non-core revenue, which includes that BPA stuff, also dropped as planned because of scaling back the UK activities.
Yeah, that planned reduction in UK BPO is definitely having a big impact on the Tech Foundation's numbers. It's a strategic move, contributes to the revenue fall, obviously, but it's likely part of that bigger picture restructuring, focusing on more profitable core areas. It's a conscious decision to step away from lower margin business.
Regionally, Central Europe seemed the most resilient. A smaller organic revenue dip there, only 5.0%. Seems it was a mixed bag. A decline in digital activities offset by a large high-performance computing deliverer in Germany. North America and the UK and Ireland, though, they saw the biggest drops, both down around 28%. Ouch. But the growing markets category actually saw a slight increase, up 2.0%, boosted mainly by a high-performance computing project in India.
Right. Those regional variations really underscore the different market conditions Atos is navigating. The challenges in North America and the UK look pretty significant, you'd have to say. But then you see growth spots, like in India with HPC, that points to potential future growth engines. Understanding these regional dynamics as well, it's pretty crucial for figuring out their overall recovery prospects.
Okay, on a more positive note, let's talk cash. Their estimated cash consumption in Q1 2025 is limited to about 40 million euros, which is a huge improvement compared to the 415 million euros burned through in the same period last year. And their estimated liquidity as of March 31st, 2025, stands at around 1.958 billion euros.
That is a very significant reduction in cash burn. It's a strong indicator that those restructuring efforts to get costs under control are actually working, they're taking effect. And having nearly 2 billion euros in liquidity, that gives them a pretty healthy buffer, some breathing room, as they navigate this transition period and start rolling out their new strategy. It's an important cushion and, let's face it, still uncertain times for them.
And looking ahead, Atos is planning to present an update on its strategy and organization during a Capital Markets Day. That's scheduled for May 14th, 2025. CEO Philippe Salle is set to unveil his vision for the group and their midterm strategy then.
Yeah, that Capital Markets Day is going to be absolutely pivotal for understanding Addis's long-term direction. Investors, clients, everyone will be watching closely for details on their future focus areas, their growth plans, how they intend to leverage those strengths they have in digital transformation, HPC, cybersecurity. And for Sal himself, I mean, being the sixth CEO in just 2 years, he really needs to use this event to build confidence in his leadership and his strategic vision. It's a big moment for him.
Lastly, human resources. The total headcount at the end of March 2025 was 74,074. That's a decrease of 5.2% compared to the end of December 2024. And this reduction includes departures linked to their ongoing restructuring plan.
Yeah, workforce adjustments are, well, they're a pretty standard part of these kinds of restructuring initiatives. The drop in headcount likely reflects those efforts to optimize the cost base, streamline things, and align the workforce with whatever those new strategic priorities turn out to be. It's often a necessary, if difficult, step to make the company more sustainable for the future.
Okay, so let's try to summarize for everyone listening. While Atos reported a significant revenue decline in Q1 2025, it seems this was largely anticipated following their financial restructuring and those strategic shifts, especially pulling back from UK BPO. On the flip side, you've got positive signs in order entry and the book-to-bill ratio, suggesting a potential recovery in commercial activity and maybe returning client confidence. Plus, their much lower cash consumption and healthy liquidity offer some stability. The upcoming Capital Markets Day on May 14th is clearly the next key date for understanding their future strategy. We hope this analysis gives a clearer picture based on the reports you shared. As we wrap up today, what stands out most to you from these developments? What's the key takeaway you're left pondering?